Hey guys, so today let's talk about how to handle the lack of cash flow objection when you're doing and offering tax planning services. Now, I know I'm not my usual, like suit and shirt, but I woke up a couple minutes ago. I was in bed just like super just thinking about this. I want to get to you as fast as possible, so I can just hey, share what's on my mind, what are some things that I've learned along this journey, and hopefully can help you out. Also, if you want some help growing your tax planning side of your business, go ahead and click the link inside the description, either above or below the video, to book a call with myself to see if I can help you inside of our mentorship program. So let's attack this thing. So when you're first getting started, oftentimes you're not dealing with the best leads. Now, this is even if you know what you're doing. In a lot of cases, there's a lot of different things that will cause people to really say, "Oh, I don't have the cash flow to do this." Right? So it comes down to they might not have the cash. They might not believe that you're actually going to do what you say that you're going to do. So that's kind of trust, or they might be prioritizing the money that they do have someplace else. Now, all three of these can be a little annoying to deal with, especially if you're you've been sitting with the person for 30 minutes to an hour, and they're like, oh, I need this. Oh, this is awesome, it's great. Then the last 5 seconds of the call, they turn into, they basically are saying they live on a street corner and they can't afford to pay you. Not to be being disrespectful, but this is kind of, it's what happened. It's the whole call is I just made $8 million this year in net profit, and I have all this stuff, and I'm paying lawyers, I'm working with this, I'm working with a financial advisor, I'm working with this. You say, okay, cool, man, the tax plan's gonna be about $5,000. Oh, I can't afford that. It's what? So what causes that? Okay, so really, again, if you have great marketing in place, it will make the sales consultation call a lot easier. The people that don't have the income to support this will not show up to your call. So before I had a lot of video content or a lot of written content, I would have people that would come to the call and they would almost be just trying to check things out for when they're potentially ready for it. And they don't really respect you quite as much, right? So what I mean by that is if someone has watched you or listened to you or read your stuff for 3 hours, 4 hours, 5 hours, 7 hours in their entire life, they start to see you as almost just this authority figure, this digital authority figure that's in their life. And they respect you more. They respect your time. They respect your reputation. They respect your advice. They respect just everything about you a lot more. So they will not book a call with you if they are not ready to buy within the next day or week, right? You I used to have where people would literally come on the call and be, oh, I'm just shopping around, just trying to see what you have. I'm not gonna buy today, and it was because I didn't have any marketing. They really had no connection to me. They really had no reason to think of me differently than Joe, Sue, Susie, Bob, Dylan up the street. But when you start getting more and more content out there, it causes you to be the only option for them. Even if they have other options they've considered or thought about, they will actually go and check with you either first or check with you at some point in the process to kind of see if it's a good fit to work together, just out of sheer just respect and just thanks for making the content that's helped me learn from there. Now on this video itself is not going to be about content, because we have a number of different videos on the channel, or if you're in the school group on marketing and stuff like that. So this is going to strictly focus on sales, but that's how you can handle in the beginning. Have better quality content that makes people feel like they want to reciprocate and they want to work with you. That's number one. Number two, now what happens in this is another step before the call. Most of the people that come to you should be filling out some sort of booking a form or booking a calendar link. So you can either use Calendly, Schedule Ones, Acuity. But when someone books the call, it should take them to a form automatically that has them answer questions. Ideally, you have it at the same time. There are some people I've seen where it's they make them book a call with the calendar, then they redirect to a Google form, and it's not all in one. You want it to be together. You want them to be able to select the time and answer the questions together. So you make sure you have the answers to the form. Because if you just have it where it's they just book a call on the calendar, then you give them the form, there's a high likelihood they won't fill it out because they feel they've already completed what they're supposed to, right? You want to put process all in one as much as possible so people feel it's a continuation of what they're already doing rather than an extra step that moves them backwards. So on your form, one of your questions needs to talk about resources both you want to talk about ability. So ability is like, can someone do this thing? That's number one. Can they do it? Like, do they have the money in the bank to actually pay this? Or do they have access to the money in the bank? We'll talk about like how to ask if they have access in a minute. Access means like, can they go get a loan? Do they have credit cards? Do they have like a board of directors? Do they have like angel investors on the side? Do they have real investors on the side? Like what does that kind of look like for them, right? And by having that question of can they afford it, you're going to be able to kind of identify, is this person, potentially going to pay me today, or are they not going to pay me today? The next question you need to have is willingness. So even if they have the money, some people are not willing to spend money on certain services, right? That's going to be slightly different than I don't have the money. It's I don't want to pay you. I don't have the money to pay you at this moment because I'm prioritizing it someplace else. I like to split those questions in some cases, and I like to combine those questions in other cases. So for me, I like to do more of a question around like, if we can save you XYZ, or if you could make an additional XYZ, how willing and able are you to get started? And I have 3 options. So rather than like put like a text box, I have 3 drop down options, right? So it's either yes, I have the money, or yes, I have access and I can get the money, or no, I do not want to invest at this moment in time. Now, how do you actually handle that? So some cases, if someone selects they have no on money on their thing, if I have a huge volume of calls, like there's some days where I'll have like 5 to 7 people book a call for like various services. I'll have 2 people book a call for bookkeeping, 1 person book a call for tax planning, 3 people book a call for like the mentorship program. If I have a bunch of calls scheduled that day and like I don't know if I have the capacity to take 7 calls just energy wise, then the people that have the worst forms are the first ones to go. Now, in a lot of cases, depending on where you get your leads from, a lot of people that will select no will not even show up to the call, right? So it's like you could theoretically just cancel the calls and say they don't have any money, and you wouldn't really lose that much. Like, to put that in perspective, I had a year where I think there was like 40 people that booked a call. Out of those 40 people 40 people who booked a call that selected they don't have any money. Out of those 40 people, I think 3 of them or 4 of them like ended up paying. So that's like 10%. And it's like that, I don't know, is an extra 40 hours of call time worth, $20K? I mean, yes and no, right? It really depends on your call volume. At that time, I had 5 to 7 calls every single day being booked on the calendar. So like those extra 40 calls weren't really that worth it to me. You know what I mean? And that's just my opinion, right? And like there was a time in my career when I was starting my business where I would take every call no matter what they said. But there does come a time and place to like where you kind of have to make that choice for yourself, right? And like what's the best use of your time? I just kind of elected that. And here's another reason why too, because sometimes like if someone, and we'll talk about this in a minute, but there's a couple different ways you can get someone who has no cash to pay, right? Number 1, they could go and get a loan from their bank. Number 2, they could go get a business credit card. Number 3, they could go borrow money from a family member. They could go borrow money from a board of directors or from an angel investor, right? If you're selling a tax plan for $5,000, $10,000, most business owners can go and get a business credit card with 0% APR for 18 months, and they can pay for your service. The reason why this is actually a cool service, because they're going to have the money eventually, right? It's just a matter of getting their foot in the door. Now, if you notice, the one thing I don't like doing as much is like payment plans. Now, payment plans is like, let's say that you have like a $5,000 service that you're offering. You're like, hey, you can split this up in between 1 payment, 2 payments, 4 payments, 5 payments, 1,000,000 payments, right? Ideally, you want to do payments that coincide with like when you're going to end the work. Like in a lot of cases, you don't want to be like where the work has already been delivered or performed, and then you still are kind of on the hook for the excess money, right? Luckily for us for tax planning, if they're going to save this much, the money's going to be like in the bank by the end of the time. So like at least by the end they can like pull it out. Ideally, you need to make sure your contract is very tight, so it does specify that once the plan is finalized, once they've done this, you have the ability to pull out of their account. I don't want to like kind of wait till they push it. Okay, that's one thing with payment plans. Now, there is one caveat. You will find that there is a certain monthly payment amount that will always get paid. So what I mean by that, so part of looking at your revenue right, and looking at your cash collections, your accounts receivable, is going to be like really analyzing who is the most likely to not pay any remaining payment plans. Now, you could of course avoid all this complication by just not offering payment plans that either pay in full or they pay in a two pay. But depending on your cash flow, depending on like where you are in business, and depending on your marketing, you might need to offer payment plans for people in the beginning. Of course, that will taper off, or it'll taper off over time. Like, you won't necessarily need to do that, especially if you're like, you have money and stuff already kind of like in the business bank account. But I'm giving you as many different angles and as many different weapons as you possibly can, so that you can then choose which ones you want to do. And again, if you're inside of our mentorship program, we give you all this, and like we just tell you how to do it like step by step. But since you're maybe watch this video, maybe you're not in my mentorship program, I still want to make sure I can help you out as much as possible. So that is going to be number one, right? Payment plans, right? But there will be a certain dollar where no matter what, it's always going to get paid. For me, I found that anytime I have like a $300 to about a $750 per month payment for anything that I offer, it almost always gets paid, because most people will have that inside the bank account, at least at the end of every single month, right? So you can kind of make that. Another thing with payment plans is like, you don't need to make the payment plans like every month on the 1st or the 15th. You can do it literally 30 days whenever they make the first payment. Or you can do it 21 days. You can do it weekly payments. I have some people that are on like a weekly payment plan, right? I have some people that are on like a every 3 weeks they make their payment, right? That's actually a hack in itself. If you make someone pay every 3 weeks, that like condenses. So rather than you, like, let's say that you do like a 4-pay. So for like, we'll say you charge someone like $4,500, right? So you do 15, 1,000, 1,000, 1,000, right? Or what you can do is you could say, just pay me $1,500 every 3 weeks. So that's every 21 days. So you actually will sneak in about a month. So rather than like it taking you 3 or 4 months to actually collect it, it actually takes you about a month and a half, give or take about a week. So that's a really, really good hack. You don't have to do it like where it's symmetrical days. You also don't have to do symmetrical amounts. You can make someone pay 25% or 50% up front, then you can make smaller payments, right? Just depends on like how you kind of want to do this. And again, inside our program, we will give you different ways to make payment plans, so you have the highest chance and highest likelihood of collecting the entire payment. So, that's something we'll do for you. But cool, so never be afraid to kind of offer payment plans, at least in the beginning. Now, that's for people that say they have like no money, and like some people will say like they have money. The reason why I care so much about this, because like what I'm actually finding is that anyone that basically puts yes on their like form to work with you pretty much signs up with you if it comes from a content-based marketing platform. So for example, if someone watches my YouTube channel, they basically book a call and they indicate on their form that they have the money to invest in whatever service I'm offering at the time, then they pretty much buy. Like, that's like, you don't have to do any objection handling. They pretty much buy. The ones that can cause you the most grief and stuff is the ones that say no, because that's when you get the calls with the most attitude, the calls with the most objections, the most mindset you have to overcome, and at the end of the day, there's a chance they might literally not have the cash. So that's what I'm thinking before the call. And like, nowadays, if someone says they don't really have money, it's kind of 50-50. If I don't have a huge amount of call volume that day, or if I just feel like, I just want to talk to people, then I'll do that. If not, then I'll just cancel the call. Cool. So now let's say that you're actually inside of the sales call now. So let's say that you're actually like early on in the call. Like, you've seen their form basically says yes, or the form maybe says no. If their form says no and I've actually done and I'm doing the call with them, then what I do is I literally call them out and say, hey, when I was looking at your form, I saw that you indicate you don't really have a lot of like resources to kind of invest at this moment in time. What do you kind of mean when you said that? That's A. Or if I'm feeling really, really like good and like I know the person, I understand the person, like where they're coming from. Yeah, man. Do you feel that if we did do something that could fit within your budgetary constraints, like you'd figure out a way to make it work? So it just kind of depends on your style, right? You can either do like the negative, which is like getting them to tell you what they mean, but then you have to like kind of listen to the bad story or whatever, or you can just go straight out and be like, hey, yes or no, are you willing to do this or not, right? At that point, like, if I like to do within like the first like 5 to 7 minutes of the call, because it's really about conserving time and conserving energy. Really about that. So like in a lot of cases, like you'll get someone to, again, it's just basically like the form, but like maybe they misinterpreted what the form, like your booking form meant, right? Or your application meant. So like, oh no, I can afford, I don't remember what I put yesterday when I did that, but yeah, blah, blah, blah. in a lot of cases, from the time they fill out the form to like they see your testimonials and stuff after they book the call to when they show up, they could be a totally different person. I've had where someone puts no, and then by the time they use the call, like, oh yeah, I just didn't understand that. And it works really well, right? So I like doing the yes or no kind of answer, because then what they can do too, there's two challenges with doing that early in the call. If you have it from a content place, like they come from like YouTube, or they come from like your Facebook, or they've read some of your posts and they booked a call like themselves, like they've come and booked a call to on your calendar, they're gonna be much more responsive to that, and they're gonna go. And like you can talk about price anytime during the call, and they'll feel good about talking and having that conversation. Versus if they don't respect you and they go, "What's the price?" in the first 3 minutes of the call, it can be very, very hard to close them, right? So if someone knows me, they respect me, and I get a feeling that they're going to buy pretty much as long as they can afford it, or it's within their budgetary constraints, I'll talk about the price at any time during the call, and I don't necessarily need to stack the value. I don't necessarily need to do a lot of stuff. I'll just, hey, this is the price, and blah 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 blah, and we'll have the conversation there. Versus if there's no marketing has been done, they don't know anything about you, they don't really respect you, you feel like, this call is a little bit cold, you want to save your price for a little bit later until you've fully built the value, you fully understand like where they're coming from, and you fully can communicate why is the price the way it is. That's just a stylistic thing. Some people might be like, oh, I don't want to hide the price then. It's not hiding the price. It's really controlling the frame of the call. You never want your prospect, especially a prospect that does not respect you or know you, you never want them to control the process. Because generally, if they don't respect you, they're basically treating you like a grunt, essentially, a grunt. So it's like, oh, just give me the price. I'll decide. I'll come up with all the answers in my head as to why I should work with you or I shouldn't work with you. But that's not really the best way, because they don't. If this is the first time they ever had a tax plan, how could they know what questions to ask? How could they know what to evaluate you on? They don't have anything to do that. They're just kind of pulling stuff out of their butt, essentially, right? So by having the process inside of your consultation call, you are teaching them how to think about this service so that they can then make a really, really good qualified decision on if they should work with you or if they should not work with you. Cool. So that's how you do it if you do it early inside the call. Now, another thing you can do is, let's say that they say like, oh yeah, let's say, sometimes on a call too, what I'll do is I will listen to how they talk. If they mention money 3 times in a row, so generally it's like if they mention money on their form once, that's strike 1. If on the call they mention it twice, that's strike 2. The third time they mention it, that's usually, if someone repeats the same objection 3 times, that's the objection they're sticking with. So at that point, you need to, at least the second time that you hear it, you have to call them out on it. Like, hey dude, like, there is an investment at the end of this. Like this is the purpose of this call, is to see like, could we actually work together? Like, like, I know you say money is kind of tight. How could you potentially raise the money to be able to do this, right? And it's like, well, there's a couple different options you have. You could do a third-party funding option. So I like using a third-party funding. And like, if you're inside of our program, we give you different options of what that is. Basically, what that is like, the person will be able to pay it in installments, but you get to collect the full amount of money within about 7 days of the person starting. So it just speeds up your cash flow and gives your client a break. Now, it is based on their credit, right? If they don't qualify for minimum like credit, then like they will get denied. But in some cases, if someone doesn't have like great credit as a business owner, like it can be 50-50. Like that, if what I've kind of thought about is like, if the third party payment processor will not give them a payment plan for like a 12 pay, it might be a flight risk. You might not want to do an internal payment plan on your own. So you have to kind of make a judgment call. Again, if you're working with us, we'll show you how to make those judgment calls. Like we give you what's called a decision tree. So I basically give you like a sheet where it's like A or B, A or B, A or B for every single like one of your decisions, so you can know on the fly what to do. But that's number 1, right? You also have to kind of see, how do they feel about credit. Now, the cool thing about most third-party funding options is that they'll have like 0% APR, so 0% interest on those finance they'll give, right? But in some cases, if the person either will not qualify for that or they just don't want to do that, like I will use a third-party financing as like my last resort when I'm talking, but it's the first resort I'll give if I'm going to give a payment plan. So what I mean by that is like, in this conversation, the first option you're going to see is like, do they have the money? Do they have someone that can give them money? Can they get a credit card? And then from there, we'll talk about third-party financing, like what is their actual credit score? Now, in terms of getting like the credit, we'll say like a credit card, some people are kind of like, depending what their background is, depending like which gurus they kind of watch online. Like they might be in the Dave Ramsey Club, which is like, oh, I don't do anything with debt unless it's like a mortgage, or there's very like specific things they'll do. They'll take debt on. But for the most part, they might be like anti-credit cards, right? So then you might have to do an objection handling line around like credit. And like if you don't know an objection handling line around credit, I'll do another video on like how to do credit objection handling in a minute. In the next video. But you would generally take them through like a credit loop. Now, if someone's against credit or debt, it could be a little bit hard for you to kind of like unwind the different ways they think about that. A lot of established business owners will be okay with debt though, so like you won't really have to worry about that as much. That's more if you're dealing with like maybe like a W-2 person that has like extra side hustle income, or maybe someone that's just starting on a side hustle income. So just kind of be aware of that. As like you have to kind of know like who is the person you're speaking to, and that will tell you and teach you how to do the objection handling loops to get them to actually like be a good candidate to work with you. Now, in some cases, they just don't understand credit. Like, maybe they're like, oh, well, my mom, my dad, my grandma, my great-grandpa always told me, like, debt is bad. Debt is bad. Then it's like you can generally do, like, another objection handling loop, which is, like, educating them on credit, like good credit versus bad credit, right? So I like doing, like, a rich dad, poor dad analogy. So Rich Dad, Poor Dad, Robert Kiyosaki, basically what was talking about like good debt versus bad debt, right? So bad debt is like if you take out a loan to go like buy like a Gucci or a Louis Vuitton like purse or belt or something, right? It's like maybe it's a depreciating asset that maybe will not give you money back, or just something that doesn't really have a lot of ability to make you money. Now, what might be bad debt for one person could be good debt for another person. So let's say, for example, that you are an internet public figure, and part of your image is that you make a lot of money, you're very successful, right? So if you maybe take out a loan for like a Rolex or whatever, it could be bad debt for one person, or it could be good debt for another person. For you, if you were to take that Rolex and then go to like, we'll say networking events, or go to a Rolex collectors club, and then you get 2 or 3 or 5 clients and it pays off the Rolex, okay, that was an investment because it could be a conversation starter, okay? But that's neither here nor there. But when you're explaining to the person, you talk very clearly, good debt, bad debt, right? It just so happens that in this case, good debt would be to you take out debt to essentially get more money, as long as it's like, better than the interest rate that you're going to be getting it for, right? So in this case, I'm going to help you save, $50,000, $100,000, $200,000. All it's going to cost you is $5K, $10K. If you go to Chase Bank right now, like you might want to have like a set of banks that you already know the process of getting the credit card or getting like the business card or whatever that you can recommend them to. So for me, for example, I know Chase Bank. I know exactly how long it takes. I know what are kind of like the guidelines, what are the specifications. I know exactly how much they're going to give most people as well. So if I know that my service can be $5,000, $10,000, most people, if they have, moderately good credit history or just good credit, they can generally get approved between $3,000 to about $20,000, pretty easily, right? Because if you go for like the Chase Bank will not actually look at their business credit to get their card. Chase Bank will look at their personal credit to get the business card, and the business card starts building up their business credit. So one objection you might get is, I can't get a business credit card because I don't have any business credit. I've not started my business credit. But if they have good personal credit, then you send them to like the Chase Bank to go and open that card, right? Man, sorry, a lot of words. I love speaking about this stuff. I paid so much money to learn how to do sales and stuff. Cool. So that's how you do it before or in the middle of the call or in the call. I think I'm gonna like end this video here. I'm gonna talk about that and like how to do it at the end of the call in another video, because this video's already been 30 minutes so far, or about 25 minutes so far. So I want to make sure you guys can have enough stuff, take down some notes, remember this stuff, and then be able to kind of like implement some of it for yourself. Okay. Now, if you want to skip all these videos, like there's gonna be a lot of videos, right? I can go in depth on all this stuff, and if you just don't want to spend the time watching all the videos, instead you want help directly. So it's like, hey Bryce, lay out this plan. What should I do first, second, third, fourth, fifth, sixth, seventh, eighth? Give me the different scripts. Give me the different calculator tools. Give me exactly what I should be doing on a step-by-step basis. Go ahead and click the link inside the description either above or below the video. Book a call with myself to see if I can help you inside of our mentorship program, okay? Now, right now, we do have a very capped limit, right? So for helping out people who are doing their tax plans, I'm only accepting 5 new people this month, okay? Now, if you watch my other channel, when we help out bookkeepers, it's a little bit easier to do, so we accept 10 people. For the tax planning mentorship to help you get tax planning clients specifically, I only accept 5 because it is a lot more intensive and we are working with a lot more closely. So if you want to see if you qualify for this help, and if you want to see if there's some spots open and available, click the link inside the description above or below the video, book a call with myself, see if I can help you inside of our program. I'd love to talk to you soon. I'd love to help you. Have a good rest of your day. Take it easy.